Okay, so as we can see, this is the 1 hour BTC which we were testing uh, on the current strategy, and we're going to dissect into the trades to understand how the profitable trades might be applicable to that leverage or something like that, and the losing trades, how why are they losing, and how can we understand them better. So to do that, we firstly need to look at a couple of trades. So let's just start by looking at the first trade, which is uh, from May 22, and this is our trade. So what we see here is a pretty simple confirmation of support, a confirmation of resistance trade. So as you can see, we have a pretty established fissure of bearish fissure. So this is really well established. There is nothing going on here, nothing going on that can confuse us, and we have and for some reason, if we were not in that position already, which we should have been in April, but since we are looking at it from May, let's say we don't didn't have any trades before that period. Ideally, the trade would be entered here, but let's say if we didn't enter here or here, we would have the opportunity, as we were speaking as well, here, because we have a pretty good confirmation of our resistance of the super trend level, and we have the fissure already on the bearish side. So that's our entry area where we would enter, and we would just keep that trade and mm, and exit when the time came, which is here around uh, these in this bar inside it. So what happens is the trade in the next, when the trade is opened in the next 10 hours, maybe 8 hours, it sees a good profit. So 39 150 to 38 400 is a 450 is a pretty hefty amount of profit, which is about $600, which is about close to 1.75%. So that's a good profit. And in the next hour, we have a volatility spike in the market, which is on a Monday and near the open of the US session. So this is what brought the volatility, and mm, the price checked our entry. But since this is not turning at the moment, and we if we just hold our heads and keep up with the strategy, we just see the volatility die down, and price moving in our direction as well. This goes on every day at different periods of time. This is US midday, and then we have a bit of a cooling period, and then the price falls down, and it's recovers again to uh, close at this level. So we exited around 38 100 area, maybe 200 area. So but we could have exited with more. But like I said, I have constantly said about the strategy, this is not something we can do, because time will happen. There will be time, if we'll only look at the next trade, there will be times where we can actually do this and miss out on a bigger, much bigger trade. So so that's what happens. So we could have exited like 500, 600, 700 dollars down, which is 2% more profit. But we, because we chose this exit, and we lost that money, but we still made a good 2.68% on that trade. So in some cases, where, as we will see in the next few few examples that in some cases, if the trade was already not already in the profit, this much profit, this loss would be the loss we'll be taking in. This exit loss would be the loss we're taking in. And are we taking this? We are taking this because there is an much bigger opportunity there to be had, which we do not want to miss. The strategy's goal is to take uh, find good opportunities and not exit on a whim, not exit too quickly before we fully realize the trade's potential, which we are about to see in the next trades itself. It's a huge trade. It made us 18.47%. Even if, like I said, the previous trade, we did not make the whole of it. We could have exited at a much lower level at 29,700, but we only exited at 32,000. So, which is this is a $2,000, $2,300 less profit we are making. So there was an extra $2,300 in this area on Bitcoin, which is a whopping, if we are taking this from this 40,000 level, even this is more than 5% extra. But we are not, like I said, exiting our trades based on anything we think is the market is going to do. We are doing it based on the ATR levels. So what is ATR? ATR is average true range. So for example, here we exited on a 400 or $500 extra, 500 $600, let's say $600 upside. We got an exit signal, but it took almost $2,500, $2,500 to get an exit signal here. Why is that? Why is that disparity? Because of the true range being different. Because of this crash, price is dropping like a lot every day. So the gap between these price level is only 5 days. So inside the 5 days, the price has dropped from 40,000 to 30,000. So that makes the ATR much higher. The true range is much wide. So that's why even with uh, the super trend working, adjusting itself, we cannot exit too quickly. And how does that work for us? How does that work for us? We are not exiting the trade at this midpoint where we have not yet made half or 40% of the opportunity yet. We are not exiting it. Why are we not exiting it? We are dropping like a lot. We have like not broken out of the super trend once, and none of the bars have broken out, and we are closing the week. So this is a week closing, and on Friday, because this is a futures, it's closed on Saturday and Sunday, but everything, the market remains obviously open in Bitcoin, and the price is getting adjusted on the opening of the weekend. So this strategy is keeping us in this trade for this period. So the ATR is already has been adjusted because uh, we move up quite a bit here. The low of this bar was at 35,180, and the high was at 35,900 on the next 2 hours. So that's a 700 plus $700 plus move on the upside in just a couple of hours, 3 hours. But we did not see the exit signal. Why? Because of this drop, the ATR got adjusted, it got higher, and the price, even with that much bounce, that much percentage bounce, could not exit the margin set by the automatically adjusting super trend. So that's how it is keeping us in these trades for the bigger opportunities, and that's why it takes us longer, much longer, $2,300 to exit the trade where we made about $7,250, but we could have made more than $10,000 in this trade. So that's the trade-off we are having. While this is providing us the opportunity for this much bigger trade, it is also protecting us not exiting the trades at wrong time, but it is also like uh, taking away some of that gain as well. So this is like an insurance kind of thing. You are putting a margin between you and a potentially very cross type of strategy. So that is being done by the automatically adjusting ATR. So ATR is, as I said, is the 10 last 10 bars. So last 10 bars. So for this, at this period, let's say at this period, the ATR at this period, let's say why we see that at this period, the ATR is based on last 10 bars, so which is here. So this is based on last 10 bars. At like these 10 bars is making this. So these 10 bars is making this. So there is so much volatility. We can see all of these bars are more than 700 $800 of seeing movement of 800 $900 movements. So that makes the ATR much higher, and that's why we are seeing that late exit. But it doesn't actually hurt us, as it is also keeping us in this trade for a longer period of time. uh, we don't want a strategy which will enter and exit randomly inside a couple of hours. Now let's look at some of the losing trades as well. So next two trades, we kind of lost. Uh, the third trade, no, the next trade we lost. Then we made a bit of money again. So let's say if we look at this, we got the signal. There is nothing we can do. It's moving up. It breaks out. We have nothing to do but wait and close the trade when this is happening. In this bar, we can close in this trade. So this is a kind of a false breakdown, which again, if we take to heart that because of this false breakout, we said we get some sort of a notion that the price is going to be bullish. We again we should not and assume something like that. We need to try. We need to be vigilant with the strategy. We need to keep up our head. We need to just follow the signals the marketers are giving us. Other adjustments will obviously alter the performance, and it would not be up to the strategy that decides us. This decides our ultimate results if we are not actually following the strategy. It is what I am saying, or trying to say. So again, we are entering and we are keeping up with the trade. It's going to a marginally higher profit, and we are losing about mm, what is this? About a couple of thousand, $2,500 in the exit process. So because the price is moving very rapidly, the ATRs, you can see when the price is narrow, the super trend support or resistance is very close to it. It's very close. The price, when the bars are smaller, gets very close to the price. But when we have these huge bars, the big size bars, the super trend gets wider. It gets wider. It gets wider, and again, it's we see this slurry of smaller bars. It gets closer. So that's what it is doing. It is always adjusting itself. But again, we should not take to heart that we lost a couple of $2,500 on a $30,000, which is like 8% extra. We are already making 5%, 5.25%, but an extra 8% is big. But we have to look at the bigger picture. We have to look at the long term view of the market. It's not. It's not on the short term. We should too focus too much on. Uh, mm, that is what I was also trying to say earlier in this in the morning. Uh, so again, this is a very good trade, nevertheless, even without this thing where we lost the profit. Uh, let's look at another losing trade. In the trade number five, which is again similar to this short trade. It's the super trend. Sorry, the Fisher has turned. We are looking for bullish trades now. But yeah, it generates the signal, but it never quite takes off. It falters, and after a few hours, it breaks down, and we don't really have much option. But in this trade, as it never quite got the opportunity. But yeah, we should. There might be trades where this happens, but it gets confirmed, and then takes off. Like we saw in this trade. So in this trade as well, the price breaks down and immediately go moves up, like exactly like this trade immediately moves up, but it gets resisted, and then it went on a rampage on the downside. But yeah, here that didn't pan out. It never quite got into the profit. We lost a bit of a like 3.55%. It's not huge, but yeah, it's certainly quite an amount. But yeah, again, looking at the bigger picture, again, this is a kind of a flattish trade. We lost a bit of money, 1.3%. Yeah, it's the same trade. It never quite moves up. Again, on the next trade as well, it never quite takes off. But we make a little bit of a money on this due to the rise in price action. Again, now the next trade is losing us money because the price obviously has flattened. You can see we are in a $1,000 margin. The super trend is pretty close to the body of the bars, and it's not generating quality signals. Here would be the obvious question: why should we trade these periods? So among these periods can be some like uh, breakout, which we don't have any idea when or where it is going to be, or how even it is going to be. Eventually, after the congestion, the super trend breaks down, and we miss the entry on this last trade of the month at this, because the Fisher is obviously against us. But we get the opportunity to enter at a later point where the price is still closer. We can enter any of these bars. I took the last bar. But yeah, it's quite good, and it generated a little bit of money. Price was there. It was close, but yeah, it was good. So these are different kinds of trades, only inside a month. So if while we're looking at let's say uh, uh, two 12 months, there would be a vastly different kinds of trades which can have uh, like add different kinds of impact on the trades. And if we set our stop loss on a very small amount, we can actually get wiped out before the trade, and make a mistake. Like in this case, it we might have entered around 30,000, I think. So 30,500, we might have entered in this area, but it went to obviously 32,000, which is like 5% on the negative side, 4% on the negative side. But eventually, it it generated that amount, 4%. In this trade, obviously, would be liquidated much before if we had a 50x leverage, and we would have to enter again here. So, but yeah, we might not get this chance anywhere. So that's a conversation that I think we need to have more openly and at a later point of time. But yeah, 50x on this strategy, I think it's a little bit too explosive. We don't really need that amount of uh, leverage on this strategy, because we are making quite good money every month. And I think 4%, 3-4% uh, margins would be there, which is about maybe a 33x, 30x, or maybe even lower, 20x, something like that. That would be much better in my opinion. But yeah, it's obviously up to you and what you use. But yeah, I think this should make the strategy uh, easy to understand how the trades are working and how the ATI is balancing itself on different periods of time to be accurate, to generate accurate margins of price and keep us on the trade, or can like take us out of trades at an appropriate time, not too soon or not too fast. So I think, yeah, let me know if you have any more questions. I think this should help you understand as well, and like deter any miscommunication about the strategy itself. Thank you.